Hello and welcome to the look ahead for Tuesday, the 1st of October, with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be watching out for the Japanese Tank and Large Manufacturing Index for Q3, also Australian building permits as well as retail sales. In the European session, Eurozone inflation and the final manufacturing PMIs will be under the spotlight. Then in the US session, we've got the ISM manufacturing PMIs, JOLTS jobs openings, as well as several Fed speakers. So just kicking off with Eurozone inflation, tomorrow expectations are that inflation will have cooled to 1.9%. Year on year, down from 2.2%. Comes after German inflation today actually came in cooler than expected at 1.6%. So that was below expectations of 1.7%, down from 1.9%, and marked the lowest level since February 2021. So what we're seeing here is that inflation is cooling and the market is expecting the ECB to continue cutting interest rates. The ECB is expected to cut rates by a further 25 basis points in the October meeting. Now here we're looking at the euro US dollar. Obviously the other side to this is the US dollar. Now the US dollar is struggling around 14-month lows on expectations that the Federal Reserve will also be cutting interest rates again, potentially by 50 basis points in the November meeting. Federal Reserve Chair Jerome Powell is actually due to speak a little bit later tonight. But if we do see some dovish comments by Powell, then that could mean that the US dollar is going to struggle further. We've also, as I said, we've got the US data tomorrow. ISM manufacturing is expected to remain in contraction at 47.5, up slightly from 47.2. JOLTS jobs openings are meant to remain more or less unchanged at the 7.67 million. So here, as I said, is the euro US dollar. We're seeing that despite the euro US dollar recovering quite nicely from the August lows, down here at the 107, 107 below 108 level, we have seen that the price is really running into resistance here around this 112 level. If we have a look here, there are several candles that have long upper wicks, which suggests there is little buying demand at those upper levels around that 112 level. Now, that's the level that buyers are going to need to take out in order to push the euro US dollar up to 112.75, which is the 2023 high. But we're not really seeing that. And I think that's basically because we've got the expectation that obviously the ECB is also going to be cutting rates as well as the Federal Reserve. So there isn't as much divergence going on between the pair there. On the downside levels to watch out for, you've got this level here, which is the 111.40, which is the December 2023 high. Below that, you've got the 111, that's the round number, and also the rising trend line support. But it'll take a move below the 110 to create a lower low. So just whilst we're also talking about what's going on in the Europe, let's just take a look at the DAX. DAX it rallied to an all-time high at the end of last week at 19,495. We haven't been able to beat that today, though we had seen some gains. Again, we've seen this really strong breakout here out of the above the 19,000 level on the back of that news surrounding Chinese stimulus, which is obviously very supportive for the German economy, given that they have a lot of trade, particularly with cars and the automobile industry with China. So there is that that was supporting that breakout. Just really found that there's run into resistance there at that 19,500 level. That's the level buyers are going to need to get above in order to continue pushing things up towards the 20,000 level. On the downside, as I said, 19,000, that's the support, that's the August high that we saw previously. And below that, not really going to get a lower low until you get below 18,200. Just other ones to be watching out for, as I said, we've got the Australian retail sales. So just having a look here at the chart from, I'll tell you what, I got it in here for the weekly chart. I think it's really quite interesting. Here we go. We can see it's just breaking out of this descending channel that it's been in since back in 2021. So basically, we've got the retail sales coming out. They're expected to rise by 0.4% after coming in flat in the previous month. Now, we do have the benefit of the RBA Fed divergence here. The RBA is not expected to be cutting interest rates now until around the start of next year. Federal Reserve is expected to go big with interest rate cuts. And then you've also got this idea that the Aussie is being supported by the Chinese stimulus that's boosting commodity prices and also commodity linked indices. So just as far as what we're watching here, we can see that this has had a phenomenal run up. This is from the low that we saw back in August down at 63.50, risen above the 200 SMA, rebound from the 200 SMA and the rising trend line back in early September, and continued to power higher. It's now currently trading at the highest levels. I mean, it's taken over this support here, which was the late 2023 high, so that was December 2023 high. Levels to be looking to going forward is going to be really this one back here, which is the 71.50 high. This was back in 2023. This is the 2023 high. So I mean, on the way up there, you potentially have round numbers 71, 71.50 before we actually look towards 71. What is 71.50? So that's what to be watching on the downside. We're not in overbought territory, so there is potential for this to have more legs on it. So that would what I'd be looking for first, though, is the 70 round number. As I said, support on the downside, you've got the 68.75, which is the high that we saw back in December 2023. Below that, you've got the 68 level, which was the high that we saw in July and pretty much in August as well. There's something to be watching on the downside, as well as this level here, which is 67.66, which is the crossing of those two trend lines. So let's also have a look at what's going on with Nasdaq. As I mentioned, we've got US data coming in tomorrow. This is really interesting because we had that breakout, didn't we, of the symmetrical triangle, rose to a high above 20,000, 20,300, and it has just eased lower. It's not really managed to push beyond that yet. I mean, there is still potential if we can get above there to push that back up towards 20,750. On the downside, key level 20,000. That's the round number. Below that, we've got the 50 SMA at 19,250. So I hope you like what we've seen, and if you do, then please do give this video a like. And if you would like to receive more videos like this, then please do subscribe.